Zelenskyy visited the US to secure continued American support for the Ukrainian war efforts, but things didn't go as planned. Trump, who's made it clear that he's skeptical about continued US funding for Ukraine, allegedly told Zelenskyy that America has done enough and that Europe needs to step up instead. Zelenskyy, on the other hand, pushed back, warning that pulling support could have global consequences. And that's where things got tense. Reports suggest that the meeting ended on a bad note, with no clear agreements, and now both leaders are standing firm on their positions. So what does that mean? It signals potential instability in Ukraine's funding, which could directly impact global markets. The first thing that happened after this clash, Ukraine's international bonds took a hit. Investors don't like uncertainty, and as soon as news of the disagreement broke, Ukraine's 2035 bond dropped by 3.6 cents on the dollar. That might not sound like much, but in the world of bonds, that's a serious dip. Meanwhile, defense stocks actually saw a boost. Companies like Lockheed Martin and Northrop Grumman all saw increases in their stock prices. Why? Because if Ukraine loses US funding, Europe may have to increase its own military spending to fill the gap, and when governments start spending on defense companies profit. But let's zoom out. This isn't just about Ukraine. This could have a much bigger impact on global markets. So how does this affect the average investor? Let's break this down into three key areas: defense, energy, and overall market sentiment. Defense stocks continue to emerge. Like I just mentioned, defense stocks are already rising, but if US support for Ukraine weakens, European nations will likely start increasing their military budgets. We could see further stock surges in companies supplying weapons, tanks, and defense technology. Investors who want to capitalize on this trend might start looking at companies that benefit from increased defense spending. Number 2, energy prices could skyrocket. Now, here's where things get even more interesting. If Ukraine's war effort weakens, Russia might gain more ground. That could lead to new sanctions and further disruptions in oil and gas markets. Remember, when Russia invaded Ukraine back in 2022, oil prices spiked. If tensions flare up again, we could see energy prices jump, leading to inflation concerns worldwide. Number 3, overall market sentiment, fear versus stability. Whenever geopolitical tensions rise, the stock market tends to react with fear. We might see a pullback in the S&P 500 and Dow Jones as investors move their money into safer assets like gold or US Treasury bonds. That means if you're an investor, you should keep an eye on how Wall Street reacts over the next few weeks. So what should the smart investors do right now? Alright, so number 1, watch the defense sector. If US support weakens, expect European countries to start spending more on defense. Keep an eye on stocks like BAE Systems, Lockheed Martin, and other companies involved in military technology. Number 2, keep an eye on energy prices. If oil prices start rising, stocks like ExxonMobil and Chevron could benefit. On the flip side, higher energy costs could hurt companies that rely on cheap fuel like airlines and shipping industries. Number 3, hedge against volatility. During times of uncertainty, gold and bonds tend to do well. Some investors might start shifting money into safer assets if the situation escalates. That's something to keep in mind if you're looking for stability. So where does this all lead? Here are my predictions. First, I think we'll see continued volatility in the stock market as investors digest the political uncertainty. Defense and energy stocks will likely remain strong, while overall market sentiment could turn cautious. Second, I expect that if Trump follows through on cutting Ukraine's aid, European markets will see more turbulence than the US. The euro and European stocks could take a hit if European leaders are forced to shift their budgets towards military spending. And finally, this situation is still unfolding. If tensions rise further, we could see another market shock like we did back in 2022 when the war first broke out. So what do you think? Will this Trump-Zelenskyy fallout cause a stock market crash, or is this just another bump in the road? Let me know your thoughts down below.